Hello, and welcome to the stock specific class here for Thursday, September the 23rd. Nice market rebound underway, giving us a little bit more clarity as to the direction of the market. We had the Fed announcement on Wednesday. Very often there's an initial move after the Fed announcement, and it tends to be the false move. And so the last few Fed announcements, the market sold off, and then it rallied on Thursday or Friday after that Fed meeting. This time the market rallied, and so the concern was that maybe that was a false move and that we might decline. And it showed up in the price action as well. We'll look at the chart here, and you can see as of the close yesterday, there was still a chance that we could have sold off for the rest of the week. But that's quickly reversed, and so definitely the market is looking a lot more bullish. There's a lot of good breadth in the rally. Volume's pretty decent, and so it looks like we should be continuing to grind higher in this trend. As far as the direction alerts are concerned, you can see momentum picking up a little bit. Last time we looked at this on Tuesday, it was all the way at the far left side in that extreme level, indicating we were really at extreme oversold conditions, and we've been able to bounce off of that, start moving in the right direction here. Right meaning the right side. There isn't a right direction in the market necessarily, because you could be playing the market from the short side and make money when the market goes down, and that could be right for you if that's your trading style. So, but this is moving left to right here, which is a good indication that the trend is moving higher, starting to move higher. We want to see that continue to build. And so because we're now in an oversold condition, there's plenty of room for the market to rally before it gets into these extreme levels here. And so this is a good time to be adding positions. We've got several positions we'll be looking to add today to take advantage of the fact that there could be potentially a lot of upside. And we'll look at the individual charts here in just a second too, so I can point some of the things out that caused me to be a little bit more optimistic, a little bit more bullish there. Brett, like I said, is picking up. We've moved into the trending range here. Sentiment is still high. Now, this is what did concern me a little bit with the selling, and especially up to yesterday, with the market rallying a little bit, but still looking indecisive. You always have to worry that when the market sells off and the sentiment doesn't drop significantly, it just tells you that the trading crowd just doesn't believe that a bigger correction is going to happen. And the reason why you have to worry about that is because if the market does roll over and start selling, that's where you get the panic selling. Because what causes panic is when people are so sure that they're right, and then suddenly realize they're wrong. They don't think rationally anymore. They don't focus on their plan anymore. They're seeing their profits diminish. They're seeing their losses increase, and they just start selling to get out to get to the safety of the sidelines, and that's what creates those panic selling situations. Is when you start to see the market sell off, but the complacency still remains high. And now this is going to be something we're going to pay attention to, because I just got done saying that it's possible the market could start rallying back up from here. What'll probably happen if it does start rallying up from here is we'll start to see these indicators move into that extreme level again eventually, and this could be weeks down the road, but move into these extreme levels, Brett, momentum, and then you'll start to see that sentiment. It didn't drop very much here, so if the market keeps rallying, it's going to be pushing into this extreme level pretty easily, and that's when you have those three all lining up in that extreme range. That's where we're likely to get a much bigger correction. So, going back to several updates I made over the last few months, we were getting close to that, and I kept talking about that potential that market would push higher, we'd get into those extreme ranges, and we'd have to really be concerned of a bigger correction. We didn't quite get there to where you would be pretty confident that a much bigger correction was going to take place. So the big one is still coming, and so we'll be aware of that. We'll manage this. We'll see how things look. Again, I'm just looking forward. I don't know how this will look when the market rallies back up. Maybe it'll look the same as it did the last few months, where it gets close but doesn't quite get into that extreme range there. But until then, as of right now, the market is behaving like it wants to continue to move higher, and so we're gonna assume, as trend traders, we're gonna assume it's gonna just keep doing that until we see any warning signs that are telling us we gotta change that thought process. Now, as far as the buy-sell ratios, we're starting to see that we mentioned on Tuesday that these were reaching extreme levels, and now they've started to kind of move back together again with yesterday's rally and then today's rally, moving off of that overbought or extreme condition there. The overall buy-sell ratios of the market is still below 1. It's at 0.43. But because of the surge of today's move, remember, this updates overnight. I would be pretty confident that this is going to be very close to 1.0 when the market opens up tomorrow, when this updates overnight. It could still be a little bit below it, but I think it'll be close enough to it to where I feel comfortable adding the positions I'm going to be adding into the portfolio today. I also had to make an adjustment in the portfolio on that SH trade because of we were doing it right at the very end of the update. I was trying to hurry and get things done. I did make a mistake as far as the position size of it. The overall position was too big. We had about $30,000 into that one trade. And so I'll talk about that when we get to that portfolio manager. I made an adjustment to get it back down into levels. I'll talk about the levels that we want to pay attention to as part of our trade management and money management. But I'll explain the error I made and that I corrected it, and what we're going to do with that trade today as well. I'll talk about that as well when we get to that point. The sentiment indicator here is come off of extreme oversold. It bounced off of that, so again, there's plenty of room to move back up towards that extreme level. Just kind of an ideal spot here to start adding positions. Now you could say, well, isn't there still worry that with all these things going on and that all these things I keep hearing about on CNBC that the market could still have another drop? It could roll over and drop. Well, there's always that risk. We can't know exactly what the market's going to do, and part of being a good trend trader is you're trying to recognize the trend as early in the process as possible, knowing that the trend isn't going to be as obvious early on. So you're looking for trend behaviors or clues, and then when those clues change. If you wait, let me kind of just illustrate this. If you come down off of a drop and you're starting to move back up, I still don't know at this point if this is the bottom. I can't know for sure if this is the bottom. There's always a possibility at this point that this thing could roll over and head back down again. But that is the area where you're going to get the best returns, is if you're recognizing those subtle clues of a potential bottom. That this is potentially the bottom. You've reached now a higher low. Maybe this thing was stair stepping down through here, and then you reached a higher high right here and a higher low. So you're getting these early signals of a trend reversal. These are the clues I'm trying to teach you in all these updates, is that, try to see if we can find these stocks that look like they bottomed out and could be starting the new uptrend. I can't know for sure that that's a full-blown uptrend until it's up here. And when it's up here, you can say, okay, clearly that's an uptrend and the trend is up. But the risk is a little bit higher up here now of that trend continuing, because it's already, when it becomes obvious, when you could clearly see that the trend is up, that's when you're in danger of the trend reversing. Doesn't mean it will reverse right away, or it has to reverse right away, but there's less upside potential in these later stages of the trend and more downside risk, because if you do buy in right here, fully confident the stock's going higher, and then immediately it rolls over and has that bigger correction like we've just seen recently in the market where it pulled back a decent amount, then you're losing money because you're buying up here and you're having to stop out and sell down here. And we did buy some things near the top before this correction happened, and that's why the portfolio is down a little bit, is because we were kind of in the later stages. When we started the portfolio, we're in a little bit of the later stages of the trend, and so it's not surprising that we lost a little bit on that pullback. Now the good news is that now we didn't get hammered too bad in the pullback. We only lost maybe 4,000 on the selling, maybe 5,000 on the selling initially. The majority of our capital is still left, and now we can be aggressive on this pullback and start to make really good returns if the market has indeed turned around and is starting to trend back up. But the point I'm trying to make is that, if you try to wait until the trend is clear, then you're at a greater risk that the trend is near being done. And so the great skill in trend trading is learning how to identify those early signals, knowing you're not going to be right all the time that the trend is reversing. Well, I might have something just barely, just higher highs, higher lows out of a bottom, or a impulsive move down, impulsive move up, and then a corrective move, something like that. And I'm anticipating that it's going to keep going up, and I'm going to manage it in case it doesn't. Meaning, if it breaks out and then immediately drops back down, I stop out. Okay, that one didn't work, but I'm going to get some that are going to work, and that's what's happening in our portfolio right now. We've had stopped out of some that didn't do what we thought they were going to do, and now we've got others that are doing what we were expecting to do, and those stocks should make up for. It should do better, bring in more than what we lost on getting stopped out of the others. Hopefully that'll make a little bit more sense when we get to that portfolio management part of the class. All right, so direction alerts look good. Let's look at the individual charts here. I can show you what I was concerned about yesterday. So again, we had the big drop on Monday. The market opened higher on Tuesday, tried to rally, but faded. It couldn't. It sold off. I mentioned on Tuesday that price action was pretty bearish. We did rally a little bit yesterday, but you can see that it was an indecision candle. We opened down here. We managed to reach a low at some point during the day right here, a high point at this point during the day here, and closed off the highs of the day. Although it still closed higher than where it opened, with those two intraday highs and intraday lows, it created a lot of uncertainty. The traders weren't overly confident that the market was going higher. Otherwise, we would have closed near the highs of the day. The reason they would have stopped buying is because the market closed. They couldn't buy anymore because the market closed. That's always a good sign when you can close near the highs of the day. And that's what it looks like we're going to be doing today, which is why I'm a lot more confident buying in today. Not only did we move up today, but look, we moved up right from the open. We gapped up a little bit at the open. We've been buying all throughout the day. We're looking to close near the highs of the day. The only thing that's right now, we could still fade into the close. There's still some time, but if it closes like that, that tells me that the reason why the market stopped going up was the closing bell hit. It couldn't keep going up, and that's a good bullish sign if it can maintain that throughout the day. But so the worry yesterday, though, was that this still was just because of the sluggishness of the rally. Remember, what creates the stair step, you have impulsive up, and then you get a pullback that's kind of sluggish. It's not a sharp pullback. It's just kind of creates more of a sideways, choppy type move. Impulsive up, corrective, impulsive up. When you get a trend reversal, you often get impulsive up, impulsive down. And then when it tries to rally, it tends to be sluggish. And then it rolls over and you get impulsive down. that's what I was worried about right here. Was you had a impulsive down. This looked a little sluggish. We had the Fed news. Remember, there tends to be a false move initially after the Fed reports, and so the false move here could have been up. We tried to rally off of that news. There was definitely concern going into the close that we could have another drop. That's one of the reasons why I kept that SH trade. That was that inverse S&P 500 I taught you about in the end of the last end of the market update on Tuesday. You can go back and review that recording if you didn't catch that. But clearly, it's now showing more of a direction here, and so now this has more of an impulsive look to it. So you have impulsive down. This is looking like impulsive up as long as we close near the highs of the day there. This is now acting like a reversal from a downward move to an upward move. Don't be surprised if within a few days we get a little bit of a sluggish sideways move or even a little bit of a pullback, but that would confirm the trend reversal because now you've got because that's what an uptrend does. You get impulsive and then corrective, impulsive, corrective. Here's impulsive. Don't be surprised if you get something like this where it moves sideways for a week or so. That's good. That would be good because it would confirm that impulsive move up. And what should follow whenever you see a stock moving sideways, you want to pay attention to the direction it's moving before it moves sideways. That's where it's more likely to go after it's done moving sideways. So that's what we'll be looking for the next few days. Is it could obviously continue to move higher. Sometimes off these bottoms, you can surge almost all the way back up to the top before you correct a little bit. Another thing, Dow had the same kind of sluggish pattern as well. It looks very strong today. NASDAQ 100, same thing. And the Russell is really what's key today. Russell is up almost 2%. So you've got the outperformance in the Russell. Russell is up greater than the other indexes. That's a good signal that there's a healthy rally here. There's a lot of stocks participating. And so these are all good signs. And then you can throw in the VIX. It's come all the way back down. And don't be surprised if the market continues to rally that we see that complacency get even higher. Okay, which again, at some point is going to be worrisome when the market becomes overbought and the complacency is still really high. But we're definitely not there yet. Chip stocks participating. They're up. They were up pretty strongly yesterday. They closed pretty strongly yesterday. Another good close today, up near breaking out to new all-time highs. That's a good, healthy signal for particularly the NASDAQ. The Dow transportation stocks. We talked about this bullish reversal candle last update. It's kind of followed through to that. You've got now impulsive down. This is looking like impulsive up. We'll see if this ends up being a little bit of a bottom on the transportation stocks. They're still definitely lagging, but again, we'll see if that kind of confirms the industrials and a rally in the industrials. Yeah, that's pretty much it. So again, the charts look pretty good. So let's take a look at a few individual stocks. Now, there's a lot we had in our watch list, so I'm not going to get into too many new ones to add to the watch list. I'll add a few here, but then I want to get into the watch list because there's a few that we already have in the watch list that are either moving that we want to put into the portfolio or getting pretty close to putting in the portfolio. So under sectors, under computer and technology, which is at the top of the list here, it's outperforming the other sectors right now. I want to keep an eye on 3D Systems. DDD is the ticker symbol, 97 strength rank. Let's switch this back to signals here. So what I'm looking at, if we look at a little bit bigger context, a 2-year chart here, you've got this big rally up to here. You have this big pullback right here. Now this is a weird kind of move here. You were moving nicely with higher highs, higher lows. you had a worrisome sell-off right here that went to a lower low right there. You rallied back up, but failed to get higher here, so you have a lower high right here. But since then, you've had higher lows. This is a little bit of an even low right here. I'm just kind of watching this one to see if it starts acting like an uptrend again. Now, I probably will wait for a little bit more confirmation on this, maybe even more than just a buy signal. But if there's always that potential, if the market is strong and if the market's going to rally, that stocks will return to their previous highs. There's a lot of upside potential there that we could take advantage of. It's just a little bit of this erratic behavior here. It makes me a little bit less confident in the trend flow, meaning it could ultimately end up here, but if you get some of these wild swings back and forth, we could end up getting stopped out before it even gets there. Let me give you an example. Let's say I like this drop right here, this move up, it pulled back in what looks like an ABC pattern right here. In fact, I think we did this one in a stock specific class back in the summer. I think we caught that move. We had a really good move off of it in one of the classes. This was before we were doing the portfolio, so we didn't have it in the portfolio. But let's say I got in and I put my stop right here. Well, you get the really big move right there. It came straight up, and then it came all the way back down. Would have ended up stopping me out of the trade, but then it went right back up again. So it may be something like that ends up happening where we get in, it starts to look good, and then it comes back down. I always worry a little bit about stocks that make a little bit of a little bit erratic moves. So that's why I'm not fully committed to this one yet. I'll put it in the watch list to kind of keep an eye on it. This is a slightly higher low right here. If it can move up and go to a higher high, start acting more like it's back in that uptrend, has that potential to get back up in this area here. We'll see. We'll put that in there and just kind of keep an eye on that. I'll probably have it on a tight leash though. If it rolls over pretty quick and drops, I'll probably boot it out. So let me add this one in. And save it. Oh, I was going to add the alert. We'll add the alert a little bit later here when I go back to the watch list. Another one here under computer and technology is this MGNI 96 strength rank. Now you might be asking why we're moving down the list a little bit. Well, some of these we already have in our watch list. We have Netlist, SGOC. Anyway, we have some of these other ones in there already. We're just waiting for the signal on. So MGNI and a 96 strength rank is still a really good strength rank. Now this one's gone to a buy signal, but I don't think I'm going to be adding this one today because there's others I want to add. But I like the way this is behaving here. Let's look at a little bit of a longer term chart real quick. Kind of similar to what we were looking at before with DDD. You had this big pullback after a big run up. It's been moving a little bit sideways here, had a slightly higher low right there, but we've had some lower highs through here. I like this impulsive move down, impulsive up, and this is corrective. That's a potential, and you have this corrective move here. You have a potential inverse head and shoulders pattern right here. But I probably want to get a little bit, I'd like to see a higher, we had lower highs right to here. I got a buy signal today, but I want to see, can it give me a higher high? Then you have higher high, higher low, a little bit more confirmation. I probably should do that on the 6-month chart so you can see it in a little bit more detail. You got impulsive down, impulsive up. You got this corrective moves right here. It looks like that inverse head and shoulders pattern. Here's an impulsive. This looks corrective. I'd like to see that go to a higher high to give a little bit more extra confirmation. So actually, if I put this one in the watch list, it has a buy signal right now, but remember that the alert goes over. It determines the buy signal after the market's closed and then sends out the alert. So I'd probably get the alert tomorrow or tonight, and then I could reevaluate it tomorrow to see if it breaks to that higher high and to see if we have any capital left to be able to add it. So let's go ahead and put it in the watch list. I'm going to save and go to the watch list so we can put the alert in. And I'll put the one on 3D systems as well. All right. One more under oil and energy. I like this ALTM, 97 strength rank. And again, this one's going to a buy signal. But this is one I'm going to, I don't want to get into right away. I want to get a little bit more confirmation. Let's look at the larger chart here. You can see you have this really big move up, and then it's been consolidating sideways here. It's been consolidating sideways for a while. It's gone to buy signals, then come back down to the bottom of the range, went to buy signal here, came back here, got another buy signal here. I kind of want to see if we can wait for this one to break out by the breakout. Because I don't want to be stuck in this one going sideways. We have too many stocks that we're in right now that are going sideways a little bit longer than I wanted them to go sideways. And so I don't want to be sitting on that. And once it breaks out, it will tend to move a lot quicker. And so, then you're not just having your money do nothing in that sideways range. You can buy into it when it's actually moving. But we'll add that one. Keep an eye on it. I'm not going to put the alert in because I'm going to get an alert on it because it's moving to a buy today. But I'm going to be waiting for the breakout there. So I'll leave it in the watch list just to keep an eye on it for a little bit. All right. Now let's go into the portfolio here. I need to kind of explain a mistake I made. When I got into the SH trade, now this was the inverse ETF on the S&P 500, because we were a little bit concerned that market could sell off a little bit further. I wanted to have that in there as a little bit of a hedge, that if the market did go down, this would go up and it would offset some of the losses. By the way, you don't have to do this. I just want to introduce it to you as a way that you can hedge and still be long the market without having to short anything, or you can buy put options sometimes, but if you're not familiar with how options work or not comfortable using options, it's a real simple way to kind of hedge a position where these will go up when the market goes down. But the mistake I made was when I set up my entry and my stop, I initially put my stop. So I got in on this day right here. I initially put my stop down below here. Although I wasn't going to use that as the stop, I told you I was going to just get out if it closed below the low of the previous day. But what happened is the difference between my entry and stop, it told me I could buy 2,000 shares of the stock. And so, again, I'm in a hurry. I buy 2,000 shares of the stock at, well, we can look at the trade history here. Let's go. You can see what happened here. So I bought 2,000 shares of the stock at $15.04. Well, that's $30,000. Now, again, the risk part of it is still the risk between the entry and the stop was still fine. If I would have gotten stopped out, I would have technically lost that 1% that we try to stay at, which would be right around $1,000 or so. But having that much capital, it puts you at a big risk, because we're not guaranteed to get stopped out at our stop price. And so the danger there is that, let me go back to the chart here. The danger there is that, you get some catastrophic or massive rally and the stock drops all the way down to here before you can stop out. Now you've got a $3,000 or $4,000 loss, and it's just really impacting because you have too much of your capital in that one position. You want to pay attention to this little pie chart right here, because you're not going to, I'm not suggesting that you have to have each of the slices equal, okay? But you want to have relatively equal. And usually the rule of thumb that I forgot to double check, which, believe me, if it was a real trade, I'm going to be more focused. I'm going to make sure I'm not going to make that mistake. But when I'm doing an update, and I'm trying to show everyone how to do this, and I'm out of time, that can happen. Fortunately, I corrected it the next day and reduced that amount down, and so it didn't hurt too bad. But usually we have a $100,000 account here. One of the things you could do is try to make sure you don't have more than 10,000 in the trade. Even if the risk analysis says you could buy more dollars worth of the shares, you don't want to have that be too big. In fact, the SH trade before I adjusted it was like this big or something. It was like a third of my entire port. It might have been this whole slice right here. It was just too big. Okay. So all I did yesterday was immediately, just as soon as I recognized that error, I went and just reduced. I just sold some shares to bring bring it down to where we were under $10,000 total capital in that trade. So you can see down here, I sold 1,400 shares so that I only had 600 left, and that 600 at roughly $1,500, actually a little bit less than that at the time, but less, around $9,000 or so. Now I did end up with a $140 loss, but that would have been much better than if we would have had a catastrophic move and we're taking a $3,000 loss because our position size was too big. Okay. Now, staying on this, I had a decision to make at the end of the day yesterday. Because again, what my plan was I felt like let me go into here we go, current holdings, here we go, SH. My plan was that if we were to roll over and drop, let me switch this back to candlesticks, that it was probably going to happen today, because remember the SPY chart. Let me pull that up here just to provide context of what I'm talking about. I was still worried that maybe this was a corrective rally and that we were going to have a big flush out move down, in which case the SH would have taken off and gone upward and done very well. Now on the SH, we didn't quite get a close below the low of the previous day, and that was the judgment call I had to make at the end of the day yesterday. It was very close, and at times it was below the low of the previous day. It basically closed right at the low of the previous day. But the way the chart looked, there's still that potential for that move down. I decided to hang on to it. Today, we're clearly going to close below the low of the previous day, unless there's some massive drop that happens before the market close, which I don't anticipate. So I'm going to go ahead and stop out of SH. Especially since none of my analysis is really pointing to a drop right here. Everything looks like we're kind of heading higher. I can always, if that changes, we can always jump back in this again. But no reason to take a bigger loss on this right now. So let's go. Current price is 14.71. So let's sell the remaining 600 shares at 14.71. So another $200 loss on this, which is fine. We went into the trade willing to lose 1,000 or so. With the two trades from yesterday and today, we lost. Let's see. Yeah, where was it? Yeah, 140 yesterday. So $350. We were willing to risk 1,000. So that really wasn't a bad loss on there. And it was a good hedge, because if we would have really gotten that panic selling, this would have shot up and it would have offset losses on some of the other long positions that we had. So I thought that was a good move. I still think that was a good move. All right. And it frees up some capital to get into some of these positions that we want to get into now. So let's go into our watch list here. KRUS, I'm still waiting to see if this can put in a higher low right here and rally off of that. Tired of looking at this one, but it still has potential. So, and it's in a top sector. So I'll keep holding on to that one. Our watch list is getting pretty big though, so we're gonna have to weed it out here pretty soon, so we're not having too many things we're following. SGOC, again, it still has a potentially higher low right there. This one again, if it has any sort of a decent move down off of this, if it drops any more off of this, we'll probably boot that one out. KOPN, kind of the same thing, but it has shown some nice movement the last couple of days, so we'll keep watching that one. TGLS has a nice move over the last couple of days. That one's worth keeping an eye on. Again, this looks like impulsive, corrective, impulsive, corrective. Let's see if this starts to become impulsive here. I guess I should keep the signals on in case we see any that have gone back to buy signals. ORMP. Now, this is one that I noticed yesterday. We had a buy signal yesterday, and I got into it because I wanted to get into this one. This one in Tesla, I went ahead and got into it. So it was good. I got in yesterday because we're up. We got that move today out of that. I just like the pattern, the way it was behaving. So I already added that one. It was from our watch list. I try to, if I can, I try to hold off and enter these during class so you can see me do it. But on some of the patterns that look too good to wait, I'm going to jump in those, and then I'll go over them in the updates so that you can see. I've got my stop on this one down below this low right here. So I'm just looking at the sideways range holding. And now that it's broken out, that's even more important. If it were to come back down and dip below this sideways range, I want to be stopped out because I don't know what it's doing at that point. If it can get a little bit closer to this previous high right here, I might move that stop up a little bit closer, adjust it up a little bit closer, but we're not there yet. We'll let it see how far it goes on this move. Beam, you know what? This is one we can boot out. I don't like the way it's looking. Let's go ahead and remove it from the list. KNDY still looks like it could be turned the corner, so we'll hang on to that one. Looks pretty good today. CLNE. Now this one did give us I think it gave us a buy signal back in here, but I wanted to, the market was looking pretty negative, so I wanted to wait, and it dipped. So it was a good thing I didn't get in. Now it's back. We haven't broke out of that sideways range, but it's given us a buy signal today. But with the market conditions looking a lot stronger, I'm thinking of going ahead and entering that one today. Let me go through the list, and then we'll add the ones I want to add. TTI, same thing. This is really looking like an inverse head and shoulders pattern, and the way it reversed right here, usually the left and right shoulders will reverse at the same spot. So having this being up today is a good sign. Just wait for that to go back to a buy signal. So this is definitely one I want to look to get into if it triggers. Tesla I got into yesterday. Again, I like this pullback that it had. And here's kind of the breakout area. Broke out of here, it's pulled back to that area. Looks like it could be moving higher. Have my stop right down below this low right here to give it a little bit of room. If it can break out, I'll probably move it up to here where you have that breakout and you have this low right here. GameStop, added this one on Tuesday, still kind of waiting for it to go back to a buy signal. But I like the price act. It's looking like it's getting ready to move up again. Big Five, it's had a nice little 2-day rally there, waiting for that to go back to a buy signal. We'll keep that one in. GDYN, this is one I want to get into. I didn't get into it when it first turned here because the market still looked like it might have that move down. Today I'm a lot more confident though. We're still close to where it first turned to a buy signal. We're also in an area where it could start to break out, move higher from here. I think that's a nice little pattern there. We'll put a stop down below this low here. I'll get to that when we add it officially. CEIX, this is a natural gas play that, or coal, actually, this is a coal play. I probably have both. But anyway, waiting for that to go back to a buy signal still, but it's looking like it's rebounding pretty nicely. SBOW, this is an oil play that did go to a buy signal. I like this pullback here. We'll get the alert tonight, but I'm going to go ahead and get into this one today because oil's really kind of taken off today, so I want to get into some oil stocks to participate in that. This pattern looks really good. DAC, this is a shipping company, waiting for that to go back to a buy signal. EDRY is at a buy signal. I'm going to wait a little bit. I still didn't really like this sharp sell-off right here. And I have to be selective here on what to add. I don't have enough capital to add everything. So I'm going to hold off on that one. I'll keep it in the watch list though. IKNX. Nice little corrective pattern here, but I'm waiting for it to go back to a buy signal. Alcoa, it's back to the buy signal. Again, I got to be selective here. I wanted to hold off on this one, get into the other trades. And then ASPF, this is another one I want to get into. Buy signal today. I like this ABC corrective pattern. It corrected where the breakout area was, broke out, pulled back. Looks like it's getting ready to take off again. We'll have our stop down below here. And then 3D we just added, and MG and I just added. Um, and ALTM. All right. Let's go to the watch list here. Let's add those ones I was going to add. Let's start with CLNE, Clean Energy Fuels. Add to portfolio. Stock specific class. Number of, let's see, our stop price. Getting in at 8.29. Stop at about $7.40. So we can add a few more shares here. Okay, so if we did about 1,000 shares, we're right at about that 1% risk, which would be about a little less than $1,000 loss. This is what I didn't look at in that SH transition cost. If I would have looked at that, it would have been 30,000. I don't have 30,000 in one trade, but we're less than 10,000, so it'll be a good help us balance that allotment out to we don't have too much capital in one trade. So I like this one. Let's go ahead and place purchase. So you can see our little slice of the pie here is about the same size as some of the others. So we can also boot this out of the watch list now since I'm in it. That'll reduce our watch list a little bit. Tesla, we're already in, so let's reduce that one. ORMP, I'm in, so let's get rid of that one. All right, GDYN is the next one I wanted to get into. Again, I'm going to get in right now. Our stop is going to be right below that low at 28, right about $28. So let's add the portfolio, stock specific class, stop price at 28. Let's go with Let's go with 400 shares. Actually, I'm going to go with 300 shares. It'll be a little bit less than a 1% risk, but I want to get the total cost under 10,000 there. Start making sure we're kind of following that too. Purchase and go to my portfolio. Okay, we have a little bit less than 28,000 left, so we have enough for 2 more trades, which is what we're getting into. We're getting into 2 more trades, so we're going to be fully allotted here. Just a second. Let's get into all right, so let's remove GDYN now out of the watch list. We don't need it in there now. SBOW. So I'm going to get in right here. I'm going to put my stop right below this low. Now, in a lot of these, I'm going to keep a really tight stop because I'm convinced this market now is going to rally forward. If it doesn't, then I want to have some tighter stop. I want to get stopped out of these pretty quick because I don't want to have that much all that capital. If we're going to get another flush out move down, I don't want to have all that capital at risk there. So I'd like to get to cash as quick as I can with those tighter stops. So add the portfolio, stock specific class, stop price at $18.30. All right, 400 shares. Actually, that portfolio risk could still be one. We can drop that down. Let's get down to closer to 1%. So let's try 300 shares. So now we're close to that 1% risk. It also ends up being a little bit lower transaction price right there. So that's good. Let's go ahead and purchase. And let's do our last one here. Well, first of all, let's kick that one out of the watch list. And the last one is ASPN. I'm going to get in on that buy signal and then put the stop down below here. Stop price at $40.50. Let's see, 200 shares. That'll be about right. We'll have a little bit of cash left, about 2,000 left. That looks about right there. So let's go ahead and purchase. All right. I do want to make some adjustments, stop adjustments, so that we can start taking profits on some of these too. On DDS, actually, let's just go through the portfolio here, and then we'll wrap things up for today. PFMT, we already have the stop, I think, right here, so can't really adjust it any tighter than that right now. Oh yeah, okay, hold on here. There was a request to put my portfolio on the screen so you can get a screenshot. Anyone that wants to, you don't even have to get a screenshot if you go back and review the recording of this. You can pause the recording and write down all these if you want to write them down. Let me also go into the trading history here. I'll try to do this from time to time so that you can see the trading history, get a snapshot of that, or keep track of that if you want to for your own records. What this allows you to do is to make sure that, I'm not making all this up. Oh yeah, I got into the stock yesterday and today it's up $50. It was amazing. I knew it was going to happen, and it'll all be here with the dates and amounts and times, and so it gives you a track record. And let me kind of move this down a little bit if you want to get copies of that. Again, you don't need to write this down. If you were writing it down, go back and review the recording, and you can pause it and everything. Or if you just want to take a picture of your screen, you can do that. All right, hopefully that was enough time for everybody. All right, let's go into my portfolio, or let's go into the screen through this here. Okay. So PFMT, again, our stop is already pretty tight on that one. Nice move today, so we should be okay. It should start working its way. And by the way, if it can break out of this, I mean, look at this. You've got all these touches along here. If it breaks out, this thing's really going to explode. So if you've gotten a little impatient with this one, be a little bit more patient, because this could end up being a big one for us if it can break out. And it's definitely acting like it has that potential. STKS, I think that we have our stop moved up on this one too. Let me double check that. I think I wrote down what I had to adjust. Yeah, I think that one was already in place. Now DDS, we are now breaking out. We're at the far right side of the extreme reversal risk. And so what I'm going to do with this one is what I've done with a lot of them recently is now my stop adjustment is going to be if it closes below the low of the previous day. If this is going to take off, it shouldn't close below the low of the previous day. It's possible that it moves sideways again and it could close below the low of the previous day, in which case I'd just go ahead and stop out. I can always get back in. But because we're at the far right side here, it's telling us the stock is pretty overbought. And we do need to take some profits off the table. We need to reduce position sizes a little bit. So I'll keep an eye on that one. You know, it looked, when I was first looking at this just before class started, it was right up here near the highs of the day. It's faded a little bit into the close. So yeah, it's something to pay attention to. If it does drop close below the low of today, tomorrow, I might just want to get out and take the small profit we have on that one at that point. And at the very least, it would give us more capital to be able to allocate somewhere else if this thing is not going to take off and go off of this move. Question, do you ever use or rely on the backtest feature? You know, I personally don't, because the purpose of the backtest feature is someone that's just going signal based. They don't want to learn how to read charts. They don't want to learn how to read price action. They just want something based, a signal approach. And if that's the case, you want to make sure you backtest your stocks that you're looking to use in that signal approach to see what the history has been with those signals in that particular stock. Has it worked over time? It still doesn't guarantee it's going to work going forward, but that's where you would emphasize the back test is if you want to keep it completely signal based, where you don't want to know what an ABC pattern, you don't care what an ABC pattern is, you don't care what higher highs, higher lows, you're just going off the signals. You know, I'm a technical analyst. I've done this for so many years that I got to look at the price action, I got to look at the chart, and I make almost all my decisions based off of that. We are using signal based as far as the general entry, 98, try to get 98 strength rank going from hold to buy, but then we're just kind of managing differently as far as exiting instead of just waiting for a sell signal. Because again, if you know how to recognize a trend reversal or a potential for a trend reversal, you'll get that signal most times before the sell signal will kick in. The sell signal is built on an algorithm, but there's too many variables to be able to include into a more precise approach. So in these classes here, I'm going to be teaching those other techniques that you can learn to recognize and hopefully get a little bit better results if you're willing to take the time to learn the techniques. Hopefully that makes sense. But all right. So again, with this stop approach, I don't know where that'll be when it finally closes below the low of the previous day. But that's I'm going to try to implement that now that this thing is. And again, remember with that approach, I don't want to do it just to do it. I want to make sure it's in that extreme reversal risk range. It doesn't have to be the far right side. It could just be entering the extreme reversal risk, but I want it to be in an overbought state before I'm going to do that, because the assumption here is that because it's in that overbought extreme condition, it's not likely to continue to go higher in the near term. It's more likely to pull back or to move sideways to reduce that overbought condition. And if it moves sideways here, if I can get a close below low the previous day, great. Move sideways, I get out, move sideways, and then when you break out again, I can get back in. And that way I'm not having my capital tied up while it's moving sideways. I might be able to get into another trade for 2 weeks if this is going to move sideways for 2 weeks, and then I can get out of that trade and jump back in this trade again or something. So that's a little bit of the thought process of maybe using a technique like that. The hesitancy I have in using the technique here is it looks like it's just barely breaking out. There is potential that this thing could, here it kind of did the same thing, and then it had a little bit of a burst before it moved sideways again. Maybe there is. Well, in that case, even if I used it back here, when did it finally close below the low of the previous day? Well, actually, it didn't do it until probably right there. That was real close. That would have locked in maybe a little bit of extra gains from when it broke out. All right, I got to hurry up here. NTLA, I am going to adjust the stop up right below here. And I know we're real close, but I just don't like the way this is moving. And if this is a higher low right here, then this is as close to, it is at a higher low right now, but if it goes any lower than that, I don't trust this pattern. And it hasn't had a real strong move the last couple of days when the rest of the market has. So I'm going to tighten that stop right up below here, which is at $144 is where I'm going to put it. And so let's go back to my portfolio. Let's find it. Let's adjust the stop. We already had it at 140, but we're going to adjust it to 144. And then the other one I wanted to adjust was RVLV. We just barely got into this one on Tuesday. I got into it here. I think I started with my stop down here. But I don't like, that's a bearish engulfing pattern right there. I don't like the way that's behaving. There's other stocks I want to get into. I want that capital. If this isn't going to go up, if this is going to pull back here over these next few days, and I don't mind getting stopped out of it. So I'm going to move it up. Here's that little pullback from Monday right here. I'm going to move it up right below Monday's low. If this drops below Monday's low, stop me out. Because the rest of the market isn't dropping below Monday's low right now, and it doesn't look like it will. If this one does, after this, the market being up so much today, and this is you might not be able to see it. Let's switch it to candles. You can see it. Big red bearish. It opened up here, and then it's going to close down here. So I'm going to tighten up that stop right there to $62. Now, if it can reverse and go back up, great. We'll give it some room to go, but I want some of my capital back if this isn't going to go. I don't want to. This is not a time to be holding on to dogs if it's not going to go. And you got these lows right here, which are right in that same spot. Got these lows, this high, this low. It drops below there. This is not looking good. So let's adjust that to 62. Oh, wait. I'm not going to sell it. You'll adjust the stop. There we go. So we had it at 54.70. We're going to adjust that to 62. All right, that's all I'm going to do for today. I think we've managed it pretty well. We're almost back to break even here. We're just a couple thousand down. I think we'll be fine, especially with some of these new trades we got into. If we get a couple new good days, a couple of good days, I think we'll be doing very well in the next week. All right. That's it. Have a great weekend. Hopefully you guys are learning from this process. This is what I like about this approach is, you know, if you were to ask me, what do I need to learn to become a trader? I can put together classes, and I've done that. I did trainings. You can go on YouTube and view them. I did them starting last December on just about everything I could think of to teach as a topic or technique, from trade management to money management to chart patterns to candlestick formations. But in these, now the focus is to now apply all that, and this is where I can get into the little details that I don't think about doing a training on. You know, that I can see something that's happening right now with our portfolio we're managing right now, and I can tell you what's going through my mind and how I would deal with it. Doesn't mean I'm going to be right all the time. Doesn't mean that that I'm a genius or anything, but it helps you to learn the little details of how to put all the stuff you're learning into practice. And I know it can get maybe a little boring sometimes. And if I try to prepare as best I can, so there's not a lot of downtime in between where I'm calculating my stops and all that. Sometimes it could really drag out to be a long time and a lot of hemming and hawing in between. But hopefully it's helpful, and it helps particularly those of you that have some trading experience and been doing this for a while. Helps you start to refine those details to get you the results that you're looking to get. All right. Thanks, everyone. Have a great weekend. Bye now.